Hello, everyone. I want to talk about a dramatic change that has occurred in the market over the last, say, 2 weeks, maybe 3 weeks. And that's this big shift from people being afraid to people being extremely bullish. Now, when markets, or I should say, investors get, when investors get excessively bullish, it's actually a bad thing for the market. It's actually bearish. So you might be saying, well, gee, Mark, why is that the case? Well, here's the thing. The market's all about supply and demand, right? And when you have everyone who is, or the vast majority of investors are extremely bullish, what do? They go out and they invest their funds, they spend their funds. Well, when they're done, what happens? The market runs out of buyers, there's no more demand, and therefore the only way it can go is lower. And the opposite is true on the downside. If people are very frightened or very afraid, what do? They sell their stocks. So if the vast majority of investors are bearish, that's actually good for the market because when the market runs out of sellers, the only place it can go is up. Now, this is one of the things that we follow here at the Market Jobber, Stock Market Jobber. It's a free site, the American Association of Individual Investors, AAII.com. And they ask their investors once a week, are you, or I should say their members, they ask their members once a week, are you bullish, bearish, or neutral? Now, our historical average going back 50, 60, 70 years, maybe probably even longer, most of the time, most people are bullish, and that makes sense. The market's been going up for centuries, right? So average is 37.5 for bullish, neutral is about 31, and bearish is about 31. So it makes sense that there's this kind of slight, you know, tint, I guess, or tilt, I should say, tilt towards being bullish because of the history of the market. Anyway, look at this. Okay, the end of May, 5/31, 29% of investors were bullish. Within a week, that jumped all the way up to 44.5. Now, that is a huge jump. That's a huge turnaround. And, well, not a turnaround, but a huge move in the bullish direction. Now, let's kind of keep in mind what's been going on over the last month or two, right? The market's been going up, but it's been very narrow. In other words, it's just a couple of the really big market cap stocks that have more influence on the market than smaller weighted market weighted stocks have been going up. So money's actually been flowing out of a lot of stocks, and most stocks are either down or flat year to date. It's just the big ones, the Amazons and the Microsoft and the Apple. Well, that's where the money's been flowing. And the last time people were as bullish as they are now was right at the end of 2021. And then when was that? That was the end of the 10-year bull market. So this, what I want to focus on is just this rapid increase in bullishness and decrease in bearishness. People have seemingly changed on a dime. Now, here's another thing I look at here. The NAAIM Exposure Index. This is the National Association of Active Investors Managers, and it measures how much exposure they have to the market. And this also is a contrarian signal. If too many people are bullish, what happens? Well, they run out of money to invest more, and then no one could push the price higher. So we are about as high as we were towards the beginning of the year of 2022 and towards the end of the year of 2021. And this was the exact top of the market. Look at the S&P 500. It peaked right at the very, very end and end of 21 and beginning of 22. So we get really bullish, start to go lower. Getting really bullish again, good chance that the buyers kind of run out of their gunpowder, as they say, and there's no more powder that's dry, and the only place the market can go is lower. Now, this is someone who I follow on Twitter, so this is not my work, so I want to just put that out, but I think it's a very interesting chart. This is the S&P 500, and this shows you the readings of these different things I look at. You know what? I didn't even bring up the CNN index. I guess I'm biased against CNN, but let me bring that up here. CNN Fair and Greed Index. Again, this just shows you people are afraid or they're greedy. We're in extreme greed now. So extreme greed, what does that mean? People are very bullish. What does that mean? It means they could have possibly have invested all their available funds. What does that mean? If there's no more buyers behind them, there's no one who can push the price up any higher. The only place the market can go is lower. So let me go now back to this chart here from Tom the Trader numeral 1. And we can see he's got the S&P 500 with the readings of the two things we just looked at, the CNN Fear and Greed Index and the NAAIM Exposure Index. And notice how every time we get high, it's right at a peak in the market. This here is the end of the bull market in 21, and the readings are even higher now. The NAAIM is 90, back then it was 89. CNN Fear and Greed is 77, back then it was 67. So today is June 14th. We have the Fed meeting. Pretty much everyone in their Aunt Mary is waiting to hear that we're going to take a pause or a break. But if people hear things that can make us think that the Fed is going to continue to raise, there's a good chance the market makes a nice move lower. Okay, thanks for tuning in, everybody. I will see you soon.